Hello and welcome to Pro Trader Strategies Market Commentary for Monday, July the 31st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, we got some good economic data today. Across the pond, we got CPI flash estimate came in at 1.3%, right in line with expectations. That's the year over year. And then the core CPI, Consumer Price Index, came in at 1.2%, expected to be 1.1, so slightly higher than expected on that front. Here in the United States, we got Chicago PMI came in at 58.9, was expected to be 60.8, and so that was a little bit lower than expected there, but pending home sales came in at 1.5%, expected to be 0.9%, so a lot better than expected there. So that was good news, one would think, for the overall markets, although we got a little bit of a mixed bag that I'll talk about here in just a second. With crude oil off on the day, down about 34 cents, came down, tested that 38.2 Fibonacci level, and is back below that 200-day moving average as of right now. So that's going to be something that bulls and bears are going to fight over, that fib level and 200-day moving average being right in line with each other. It's going to be kind of like that. It's going to be a thick line in a sense to try and maneuver back and forth between, but was above $50 for the first time in a couple of months, and has now since, as you can see, gone back below that $50 a barrel area. On to gold futures, they're slightly off on the day by about $1.50. Can't get through that 61 fib level. It could just be taking a breather right now. The overall markets, you would think that are going to push gold higher if we start seeing the NASDAQ, E-mini S&Ps really start to fall off. But we're seeing that it's more of like a sector rotation, it feels like right now, where people are pulling out of tech and some of the riskier underlyings and putting it into the blue chips right now. So that could be as people are starting to worry about a little bit more of a probability of a correction in the overall markets, that they're kind of throwing money into those blue chips right now. And we'll talk about that here in a second. Bonds off on the day. This is what I was also talking about. We start seeing equities come off. You'd probably see bonds kind of get a little bit of buoyancy. Same with gold, but we're not really seeing that right now. But if we look at the Dow Jones Industrial Average, just blasting higher, as you can see here, making a new historical high, and we are very close to that high right now, just off by a couple of pennies for most part. But then if we look back at the NASDAQ, you can see the NASDAQ is off pretty decently, almost 19 points right now. Inside day for the most part. I mean, it did break out above that, but back below that 5-day moving average, which is a little bit of a tendency to signal more bearishness to come. So we're below that, settling below that on Friday. Now again today, below that, can't get it back above. That's going to make it look like it wants to roll over a little bit in the NASDAQ. E-mini S&Ps, similar situation, toying back and forth with that 5-day moving average, but just off slightly on the day. So that's what I'm talking about with the mixed bag. It's really not giving a clear picture as to what's going on right now, other than maybe a possible sector rotation out of some of these riskier small caps into the large cap blue chip kind of stocks. So, and then on to a few things that I've done. Or actually, let's look at the 30-day or 30-minute chart of the E-mini S&Ps, just kind of, like I said, toying around with unchanged. Really came off on that Chicago PMI number. It was a bit of a wet blanket when the market was trading near its highs, and then PMI came out and people started getting a little bit more nervous. Not that they weren't already nervous, but just kind of solidifying a little bit of that. We're at highs. We're not seeing hugely robust economic data coming out. So it's just kind of like steady as she goes, really, and that's just a stagnant economy at the end of the day. It's just really not moving to keep up with everything else. Here's the trade that I took off. If you remember with UPS, beat earnings, really kind of got beat up on it. I talked about some of this online shopping and how that kind of gets the endorphins going for people. So I think that UPS, FedEx are going to do quite well in the years to come, and thought it was a little bit overdone to the downside. So if you remember, I went into the August and sold the 104 puts after that earnings because it didn't really get that volatility crush. We're starting to see some of that volatility come out of it a little bit, mostly because of this big drop. That's going to hold that volatility up, and then a bit of a rebound. So I took advantage of that fact that the volatility just hadn't come out of these options yet. So sold those 104 puts today with the move higher and volatility continuing to come out of those options. I was able to sell those August 104 puts for 22 cents. Bought them for, or sold them for 51, bought them back for 22, should say. So a little bit better than 50% of my max profit on that. I haven't added anything really to my overall portfolio right now. Trying to, again, still save some of that margin for earnings. And today, or actually tomorrow morning, but for this evening's earnings, I'm going to be looking at ADM. We have Under Armour, Sprint, British Petroleum, ADM, and Cummins. I'm going to be looking at ADM here, probably looking for a bullish trade in there, but it's going to really kind of depend on how the overall markets are working. And Cummins, I might just end up doing like a wide strangle in here to try and capture as much premium as I can, because I don't really have a directional assumption with this. I think that auto sales and stuff like that, and some of these other Caterpillar and John Deere have been doing pretty decent, so that should help Cummins. I'm going to probably put a strangle around that, thinking they come out pretty in line with expectations. All right, so that's all I've got for today. Make sure you follow me on Twitter at Wolfman's blog if you want to check out which earnings trades I'm going to be doing and how I'm going to be playing them. All right, so if you can't take that, take it easy.